plans to even further significantly the offerings and really establish the Singapore exchange as more of a global hub than it already is?
I think what we have established over the last decade, or even more, is that we are a neutral and open jurisdiction with international norms around how trades are done, how trades are monitored, and how they are settled. So market participants are inherently comfortable. They're comfortable with the quality of our regulations. They're comfortable with the creditworthiness of our clearinghouse. So I think that gives us the opportunities to see how we can help them and provide the exposure. So it's not just going to be about China. It's also going to be about India. We have the Gift Connect that we have been talking about that will clearly improve, hopefully, the liquidity by combining the domestic and the international liquidity pools, which will assist in price discovery. And there will be other markets within Asia which we'll want to explore. And I think some of them could be done in partnerships as well.
So that's the plan, because it's incredibly difficult for investors to invest in a lot of these countries, because Singapore could be that connect, that hub that allows for that investment, whether it be expressed in derivatives, whether it be expressed in over-the-counter products.
Yeah, so this is something that we have to work with the ecosystem. We are a node, we are financial market infrastructure. We need to bring our ecosystem along, whether it's the clients, whether it's the brokers and intermediaries. So that's the thing that we need to do. Introducing products is not the most difficult, but it's ability to create the adoption, and that will then bring about liquidity, and that's what is useful for investors, where they can get in and out, express their views, manage their risk exposures.
Yeah, this is a question I ask some of your peers actually at the SGX sometimes, and for better or not, whether it's fair or not, sometimes the SGX and the STI gets a bad rap for being not a very sexy index, because you don't have the high-flying tech stocks or these other things. It seems being very defensive, being very stable, being somewhat boring, some would even say. But we've seen the downturn in stocks recently really hit some of these very exciting values. And the STI, no surprise, was the best performer in Southeast Asia last year. Do you think that the rap that the STI gets for being boring is perhaps unfounded? And do you think that perhaps in how things have reversed with regards to the market, do you think that right now the STI and the SGX is proving its merit against some of these other quote-unquote more exciting bourses, for instance?
Well, I think the value has held. So I think in part because of the bank's performance, and I think they constitute a large part of STI. And that's also a growing indication of how they have grown their business. So I'll say STI, traditionally known as very defensive, very safe, largely due to dividend yield stocks. But I foresee that there's an element of growth coming back, not just, in my view, to SGX, but also to the broader STI constituents companies. So I think we are situated in the right part of Asia, Southeast Asia, where you see a lot of growth. And I think the STI constituents, with their growth plans, and if they are able to execute, and where economic conditions permit, I think we will see a lot more better earnings performance.